Today, XRP's price settles after a glitch over the weekend. The SEC delays making a decision on a spot Bitcoin ETF. And Puneet Singhvi of Citi walks us through the current crypto strategy for institutions. Welcome to CNBC's Crypto World. I'm Kate Rooney. The crypto market holding steady through the weekend and into Monday morning. By noon Eastern, Bitcoin held above $29,000. Ether is still traded around $18.50 and XRP is trading around 63 cents. That's back to normal after a momentary glitch over the weekend sent the token's market cap soaring to trillions of dollars. A possible mistaken trade was filed at $50 on Gemini's exchange, which temporarily inflated prices. Okay, let's talk about some of the top stories. Sam Bankman-Fried is now in jail after a judge revoked his bail on Friday. A judge sided with federal prosecutors who claimed Bankman-Fried engaged in witness tampering. In the ruling, the judge concluded that there was, quote, probable cause to believe the defendant tried to tamper with witnesses at least twice. Prosecutors said that over the past several months, SBF sent more than 100 emails and made more than 1,000 calls to members of the press. Now he's been placed in the Metropolitan Detention Center in Brooklyn, a facility with limited internet access and reports of poor conditions. Next up, the SEC just delayed its decision on a spot Bitcoin ETF from ARK and 21Shares. The agency was due to issue a decision on the proposed ETF on August 13th, but pushed that decision back weeks to months while it sought public comment. This proposal actually came before the latest wave of ETF applications from the likes of BlackRock, Fidelity, and more. Optimism has been growing that these will get approved thanks to surveillance partnerships with Coinbase to address concerns of market manipulation. Last, Senator Cynthia Lummis has stepped into the court battle between the SEC and Coinbase. The Wyoming senator filed an amicus brief with the Southern District of New York on Friday, dismissing the idea that the SEC can, quote, legislate by enforcement. Lummis said that while the SEC seeks broad authority over crypto, most bills in Congress would actually spread regulation out amongst other authorities. Lummis's filing comes at the same time several legal scholars from around the U.S. and crypto lobbying groups also filed amicus briefs with the court in support of Coinbase. All right, on to our main story. Last week, Crypto World's Tanea McKeel stopped by the Access Digital Assets Summit in New York. She got the chance to sit down with Puneet Singhvi. He's the head of digital assets for Citi's institutional client group. The two of them spoke about the strategy for big-time investors.
Thank you so much for joining me today. Tell me what it's like for institutions trying to get access to the crypto market right now, and how has appetite shifted recently?
I mean, when you think about institutional market, like asset managers, for example, while there has been a slowdown in terms of their engagement, but they continue to get engaged broadly in digital asset space through pilots, through building baseline capabilities. We do see a shift where more away from price action to actually thinking about how tokenization, how DLT could help them in kind of day-to-day processes in the financial markets, be it operational efficiency, be it from a capital collateral perspective, or from distribution perspective. So suddenly the thinking definitely this year has been much broader and actually looking at how this technology could impact financial markets on an ongoing basis. From Citi perspective, also kind of we going with where clients are, so engaged with clients such as large institutional asset managers, with corporates, and assessing what kind of services they might need as part of that journey.
For a long time, retail investors were sort of in the driver's seat for crypto. Right now, they're on the sidelines, and institutions seem to be the ones to watch. Do you think that that narrative holds up as we look for the next bull runs? Are retail investors going to take the reins back, or do you think institutions are paying enough attention now that they'll be the ones driving the market?
Yeah, it's difficult to say. Kind of my role covers the institutional side, not so much the retail side. But on the institutional side, I'm sure the adoption will be cautious, will be thoughtful, and will take kind of slow and steady steps. And I think that'll be true for the client base which we have, as well as the bank sector, the financial sector, and so on.
Mm-hmm. Is there any value in altcoins to institutions after last year, or is it just Bitcoin only, maybe Ethereum?
I think kind of future really is looking at the core financial markets and seeing financial markets are very vast. They have going through the whole process of digitization as core part of evolution over the years. So where we really see is looking at traditional financial markets, look at bonds, look at equities, look at collateral, and how we can drive next level of efficiency using this technology. So it's really not so much on kind of any activity which is happening in the fringe, but actually activity which is happening in the core, which could be impactful for the financial markets in the long run. So we definitely focus on that as the primary area where we're devoting time and effort.
What exactly is that impact of DLT or blockchain technology on finance?
Digitization can happen through many ways. Now, as the technology evolves, now we have two more options, which is tokenization and use of DLT. To accelerate digitization, reduce friction. What is unique about tokenization? When you hear about this broad theme of tokenization, it's a very broadly defined, broadly used term, which could be just use of DLT as registry to maintain books and records to native issuances which exist only on a DLT platform. But what's very unique about this whole component of this technology is that you could actually have value stored, the information about the value stored, and the transfer of that information value happen much more seamlessly in a distributed fashion. So I find that very fascinating in terms of how that could apply. Could it apply to drive next level of operational efficiencies, post-trade processes? Could it apply to actually make collateral markets much more efficient? Financial system uses a significant amount of collateral. They typically have buffers spread around. Could we actually make collateral process much more seamless? So what about fractionalization? And people do talk about it, bond market, and typically the face value is very large. If the investors need to invest in it, could it be a fractionalized version of bonds available? So we do see a lot of opportunities which span across the product line and the lines of business. Money and tokenized money and programmable money is another theme. Citi, along with a number of institutions, actually announced with the Federal Reserve Bank of New York Innovation Center recently on a POC called Regulated Liability Network, where you can have all form of sovereign money across multiple actors be on the same platform, and maybe could drive next level of efficiency from the money movement. So we do see both on the asset side and on the money side opportunities which could drive next level of efficiency as well as innovation.
So historically, the idea of tokenization using blockchain technology has been more about cost cutting rather than revenue driving. Has that changed?
Great question. It's definitely efficiency is given because that's the core component of a distributed technology like this, where you can take reconciliations out, depict assets better, depict money better. But as we do that, could there be new opportunities to create new products and services for clients? Quite possible. Cross-border flows and transactions. Currently, they might not be 24/7. They might not be as instant as we want them to be. Our effort is can we leverage this technology and continue to identify ways in which we can drive much more innovative payment mechanisms than what we currently have. On the asset side, there's been work always looking at how funds get distributed, and can fund distribution could improve where you have wider access to it. So fractionalization would be, I would consider as an innovative product because it's enhancing distribution. As we have programmable money, Internet of Things, as many of these things collide and money becomes embedded in many of the commerce-related processes. Again, that's pretty innovative and really enabled by the technology.
All right, that's it for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.